2019 is setting up to be a super interesting year as an investor. Some markets are going to continue to decline in value, other markets are going to sit flat, and certain suburbs around Australia are going to start to move off their bottom. So in this video, I'm going to explain 5 tips that you can think about if you're thinking of investing in property in the next 12 months. Now, the first tip for buying a property in 2019 is realizing we are finally in a buyer's marketplace. Because of the negative sentiment in the media for the last couple of years, because it's been really difficult to access finance, and because property prices in Australia's 2 largest markets, one being Sydney, the other one being Melbourne, are declining, we're now in a position where a lot of Australians, in fact, a huge number of Australians are actually sitting on the fence. You can see this all the way through the Australian economy, from the decline in the number of jobs in the real estate industry and the construction industries, through to what people are consuming on places like A Current Affair or Today Tonight or in the newspapers or on the morning shows. The general sentiment is that prices are declining and people don't know how far in Sydney and Melbourne they'll continue to go down before they soften and level out. And so as a buyer who is very interested in timing, because like the great investors like the Ray Dalios and the Warren Buffett say, you buy when others are not buying and you sell to people that are greedy and that are looking to buy. And so if you understand that rule of investing, years like 2018, 2019 and 2020 become what I believe is the best buying opportunity, not in Sydney and not in Melbourne, but maybe in other markets like Brisbane, for example, that we've seen in the last decade. Now, the second tip for buying in 2019 in terms of understanding the marketplace and slowly beginning to educate yourself or build that confidence that you need to actually slowly take action towards achieving whatever it is that you want to achieve in your future is to know your history. Now, having a good understanding of what's happened in the past helps you understand what could happen in the future. Now, in 1988 to 1990 in Sydney, property prices declined in an 18-month period by over 25%. So when you look at what's happening right now with property prices having declined by between 12 and 15% in Sydney in the last 18 months, this stuff has happened before. Unfortunately, when we get such a strong run in prices, but incomes don't move in line with that, we have to see a correction down to levels where people can actually afford to buy homes. And so we know a lot of the speculation in Sydney and Melbourne in the last few years was a result of Australian and international investors. But as the government has stepped in and made money a lot harder to get, and those international buyers are now no longer in the Australian marketplace, where it's very difficult for them to do anything, we're starting to see a softening in those markets. But if you know enough about your history, you'll know that in the last 20 years, the Sydney and Melbourne markets on average, despite the ups and downs that have happened, have grown on average by 8% per annum. Over the same time, the Brisbane marketplace has grown by 6% per annum. But if we look at the longer term history and we look at the 46 years leading up to 2016, what we've seen is that prices in Brisbane have grown by an average of 9.7% per annum, 9.6% per annum in Sydney, and 9.6% per annum in Melbourne. So if you start to take a bigger picture, you take your Sydney and your Melbourne bias off, there are other marketplaces that have been sitting very flat. When you look at the recent history in Brisbane, according to CoreLogic, Brisbane is now more affordable to buy in 2019 than it was in 2008 when you factor in inflation, according to CoreLogic. Now, that's an interesting piece of information, because if you apply your short-term history, which is the last 11 years, with your longer-term history, you can begin to paint a picture of, you know, the potential for Brisbane. Now, I'm not saying that over the next 50 years, property prices are going to grow anywhere close to what they've grown in the past, because not many countries around the world have experienced such strong property prices for such a long time like we have here in Australia. But even if they grow half as well as they have, or even a third as well as they have, then you and your family might still be able to use property as a vehicle to set your families up over the next 15, 20, 30 years from today. And I know taking a longer term perspective can be really difficult for a lot of investors, But in marketplaces like this, you just can't expect the short-term returns that you might have been used to on a Sydney or a Melbourne purchase, or what you've been watching there for a while. And it's important to start getting this perspective of history so that you can take advantage of current buying conditions and actually set yourself up in a more meaningful way. Now, the third thing that I wanted to talk about is it's very, very important in 2019 to know your markets. The first way that you can start to wrap your head around these markets is looking at the Heron Todd White month in review report, and have a look at what Sydney's doing, have a look at where Melbourne is, have a look at Brisbane and any other markets that are of interest to you, and begin to educate yourself on what the state of play in Australia is right now. You can also look at the CoreLogic Australian housing market updates that come out each month, and that's just a nice, easy video on YouTube that you can consume as well. But when I think about markets in Australia, what I do know is that right now property prices in Perth and Darwin are still in the declining phase, according to Heron Todd White. Sydney and Melbourne are unfortunately also in the declining phase, where Brisbane is at 8 o'clock, which is the start of the recovery phase. Now, when I overlay that history that I was talking about of the long term, the medium term, and the short term, as an investor, knowing that 25% of Australia's job, population, and infrastructure growth in the next 10 years, according to Michael Matusik, is going to flow into southeast Queensland, 25% into Sydney, 25% into Melbourne. They're the three marketplaces that I'm always looking at, but unfortunately I can't always buy them, or it would be better to buy one of them over the other. So if we were talking now in 2012, we'd be having a conversation that Sydney and Melbourne probably represent great value, because Brisbane, you know, in comparison based on affordability and incomes, probably wouldn't have looked as good at that time. But now it's 2019, Sydney and Melbourne have gone through extreme growth over a short period of time and now are declining, where Brisbane over the same period has sat very, very flat or slightly increased in value. So it's really interesting to start considering that. Now, I'm not a gambler. I don't like to roll the dice. And if someone says to me that 75% of the job, infrastructure, and population growth are going into three areas all on the east coast of Australia, then they're the three areas that I'm going to start educating myself on and becoming more focused on as an investor. The fourth thing to acknowledge in 2019 is that we are no longer in an Australian housing market. So when people say that Australian house prices are declining, or Sydney or Melbourne house prices are declining, or house prices in Hobart are going up, or whatever the story is on the front page of the paper or selling the sizzle on TV, we are not an Australian housing market. We are actually markets, Sydney, Melbourne, Brisbane, Perth, Darwin, etc. And within those markets, there's good pockets, there's cheap pockets, there's areas with potential for growth, and there's areas that are going to decline. So at all phases of the cycle, sometimes there's value that represents itself and sometimes there's not. So it's really important this year to start wrapping your head around, you know, that maybe the average price, maybe the average in the Brisbane market this year will be 1%, maybe it'll be 0%, maybe it'll be minus 5%, but certain pockets of Brisbane, to get those averages, have to go up and other pockets have to go down. And that is the same case for Sydney and the same case for Melbourne. So I would say in 2019, stop the generalization and start getting really specific around the high quality areas of the cities that you like or that you're looking to buy in, and then the specific higher quality suburbs within those areas. And the rules that I like to apply are always buying houses, and I do like to buy walking distance to the beach if I can afford it, or within 20 k's of the city, because according to CoreLogic and Michael Matusik, they're the areas that perform well based on the history or the past. Now, the last thing I wanted to say, or the fifth thing, is that 2019 is not a year to go out there and be a hero or to expect short-term gains. And I expect 2020 won't be that type of year either. It's very important to take a low-risk approach to investing and to keep good savings and a good buffer in account for a rainy day. Now, the people that can be taking action in this type of year are people with good equity, some cash savings, you know, people that are looking at a longer term approach to investing, not a 1 year result, but a 15 to 20 year result. people that want to take advantage of the market when not everyone else is buying, so they might be able to get something at a slightly better price. I think cash flow is very, very important this year as well, in the sense that you really don't want to be losing money in terms of the equity on your property and costing yourself money by having a negatively geared property, which is why I like those types of strategies, around the north side of Brisbane, nice big house, buy a, $400,000 home, for example, within 25 k's of the city, and rent that $400,000 house out for maybe $380 a week. Then go and build your secondary dwelling or your granny flat for another $120,000 as a building loan or construction finance, and get another $280 a week from that. So instead of spending $850,000 in Sydney and Melbourne and getting $550 a week in rent, consider something else, knowing that the long-term performance of Brisbane can be positive. We've just gone through a negative period, and maybe look at spending $520,000 to get $680 a week of rent. So I think it's really important. This isn't the market that you go out there and you recklessly buy up heaps of assets that are negatively geared and put yourself or your family at risk. It's a market to be cautious, to educate yourself. I believe that it is absolutely the best buying opportunity in Brisbane in the last decade, although I don't believe the results in the short term are going to be that meaningful, but I believe longer term, over the next 15 years, hopefully things continue to head in the right direction. So I wish you all the best this year. As I said, it's a buyer's market this year. Really begin to understand your history, your market and your suburbs, and just be careful. Make sure you take a risk approach this year, and you educate yourself and you create the right strategy before you get started. So for those of you looking to think about investing this year, my brother Simon and myself would love to offer you a one-on-one strategy session. Please jump over to www.pumpedonproperty.com and book in a time where Simon or I can sit down with you and really talk about where you are right now, what you'd like to achieve in 2019 and 20, where you'd like to be long-term or how you'd like to get there. We can talk about what's been holding you up. Is it the fear that this is the wrong time of the market to buy in? You don't know where to buy, you don't know what to buy, you've been consuming too much information, or you don't have the time to do it. And we can talk through those things, and then we can talk about and educate you on the market, as well as what your next property could potentially look like. So please go to www.pumpedonproperty.com. And if you haven't already done so, please subscribe to our YouTube channel and check out our podcast, The Pumped on Property Show, on either Apple or Spotify. But I wish you all the best. Good luck this year.